Investors and media friends. I'm the spokesperson April Pan from CDF. Welcome all of you to join CDF's 2023 Q1 Investor Conference call. We have 4 parts for today's conference call. First of all, we will invite Steve, the CEO of CDF, to talk about the performance review of CDF and updates in ABCD strategies. And next, financial updates. The subsidiaries performances will be covered by the Senior Vice President of Mandy Zhao. And lastly, the QA session. Before we invite Steve, we have the interpretation function available on WebEx. You can select the language you need. And now we'll invite our CEO, Steve.
Good afternoon, everyone. I'd like to begin by giving you an update of our financial performance highlights. During the first quarter of 2023, our net income was $3.5 billion and earnings per share of 21 cents. CDF was ranked number 4 globally and number 1 in the Taiwan Dow Jones Sustainability Index for the life insurance financial sector. We also announced the elevation of KGI SITE as a first-tier subsidiary of CDF in order to accelerate our growth in AUM. In terms of China Life, first quarter net income was $321 million, which was impacted by higher hedging costs. We remained focused on high-value products and increasing our market share of regular paid policies. The NB margin increased from 25.8% to 34.4% last year. And we continue to maintain prudent investment management in a very volatile market. Our pre-hedging recurring yield was up 25 basis points year on year to 3.4. In the China Life section, we'll also give an update on embedded value. KGI Bank posted a 13% year-on-year increase during the first quarter to $1.54 billion. We continue to optimize our asset mix with SME and personal loans growing 26 and 20% respectively year on year. And our consumer finance JV continues to do very well with 86% year-on-year growth for RMB 83 million profit, and lending balance grew 71%. CDIB Capital benefited from the investment portfolio's appreciation, and we saw first quarter net income at $0.9 billion. AUM also increased to $51 billion, with the Kunshan Taiwan Business Fund completing its first closing during the first quarter. CDIB also signed an MOU with Hon Hai to jointly establish the Kai Hong Renewable Energy Fund, which is the first green energy investment platform across both technology and financial sectors. In terms of KGI Securities, net income increased 31% during the first quarter to $1.9 billion at a 13.9% ROE. Overseas contribution grew 213%, and we also saw Singapore deliver very strong quarterly profit performance of record high. Our share in the SGX stock right now is at 12%, up from 6% in September of last year. Our customer AUM also grew 12% and 10% quarter on quarter to $371 billion as of the end of March. If you turn to the ABCD strategy, today I'm going to focus primarily on the subsidiaries, but on page 7, I thought I would touch on just 3 of these, which I will not cover in the following section. The first one is under the employer of choice. A lot of work occurred during the first quarter to further cascade and align our KPIs and incentives across the group. We focus on both financial and non-financial elements and things such as NPS, employee survey, ROE, net income, digital risk, etc. In terms of customer focus, a lot of work continues to happen on repositioning the brand, and we now have an aligned tagline for all our subsidiaries around committed to your prosperity. And you'll see more of that as we continue to expand our marketing presence. And last but not least, under execution excellence, a lot of work has gone into optimizing our investment and risk appetite. Given the turbulence in the market, we've taken a very prudent approach and continue to very tightly manage the business in order to mitigate volatility and maintain strong capital levels across all our subsidiaries. If I can then turn to China Life, I'm going to only highlight a few for each subsidiary. For China Life, under Accelerate Growth, we saw them being the first company to receive accessibility certification for both mobile applications and its official website. Under C, there's a new web page that was launched to make it easier for customers to understand insurance in a more user-friendly manner. Under D, we saw the sale of high-value products increase 22% year on year, which contributed to 36% of our sales compared to 20% last year. And last but certainly not least, we saw our Q1 FYP market share increase to 9.4% from 8.2%. Again, highlighting the focus on continuing to drive high value in the insurance business. For KGI Bank, the bank continues to expand its ecosystem cooperation with now partners in logistics, crypto exchange, and real estate. In terms of mobile, we expect to see a major upgrade of our mobile banking application, which was recently relaunched earlier this year, with over 90 new features being added this year. And in terms of execution, we continue to invest heavily on RPAs. We have almost 100 of them now. We're going to continue to expand in order to further streamline and simplify our operations. So I can take you to CDIB on page 10. CDIB continues to explore new asset management products. You'll see in the CDIB section, we're going to talk a little bit today about private credit, just to give you a sense of how we've been developing that product. We also launched our Tokyo Innovation Hub in Shinjuku in Tokyo, which is designed to help us accelerate innovation, much like we do in our Nangang Center here in Taiwan. They also completed 2 co-investment deals, deploying $3.3 billion. And as I mentioned, they signed the MOU with Kaihong Energy, which will be a great first step to further accelerate our green energy industry investment. On page 11, in terms of KGI Securities finally fixed our online service password recovery. As you're aware, we spend a lot of energy understanding customer needs and customer issues. When this problem was corrected, we saw a reduction in 26%. So this is just one example of us continuing to improve our services based on customer feedback. Also, we're doing much more tracking in terms of digital footprints to reduce drop-off rates, and we saw an increase in completion rates by focusing on this, as well as 20%. KGI Securities has also trained now over 500 China Life agents who have now passed the security specialist exam as a way to further expand the products and services they can offer the customers. And on wealth management that we've discussed before, we continue to further expand the skills of our agents with now a 30% increase in people that have financial consultancy experience to provide broader products and services to our customers. I'll now turn it over to Mandy, who's going to take you through the financials.
Now we'll go through with our first quarter profitability. If we move to page 13, will be the CDS performance. The net income posts at 3.5 billion. The EPS is 0.21 NT dollar. And at the end of April, our total asset has amounted to 3.6 trillion. And if we look at the total equity, because of the valuation of both stock and bond market have recovered, so our total equity has recovered back to the level of 233 billion. And next is the profitability of our subsidiaries, and subject to the rate hike and the cost of hedging increase, the capital gain has decreased, and China Life posted 0.3 billion net income. And next, because of the profit coming from the overseas markets, we can see that CDIB Capital's net income grew by 12%. And we have also made a lot of investment in the healthcare industry and post a net income of 0.9 billion. And this is actually a great increase comparing to last year, where we were subject to great market volatility. And as for KGIB, we see 1.5 billion of net income, and the ROE of all of our subsidiaries have also improved. And next page is our capitalization. As the capital market stabilizes, our Q1 double leverage ratio has lowered to 125%, and all our subsidiaries' capital ratio are also maintaining at a good level. And next, I'll move on to the subsidiaries. First is China Life.
Please go to slide 17. In terms of premium income, due to the effect of rate hike, the increase of short-term rates is still affected sales momentum as Q1 FYP weakened YOY. The overall industry declined 39%, while China Life dropped 30%. And for product strategy, we still continue to focus on restructuring our product mix. For regular pay, the volume increased by 13% YOY, and the percentage also took up 50%. For high margin product is our focus, and for single pay, it's mainly USD policies. And as you can see on this slide, for our channels, China Life maintains a balanced development. And for agency channel, the contribution has gone up to 29%, focusing on 6-pay products and A&H, these high margin products. And for FYPE, China Life continues to strengthen its overall product mix. The regular pay has taken up nearly 90%, and we still outperform the industry average. And the next slide, we can see our VNB. And because we continue to optimize our product mix, focusing on regular pay products, so despite FYP drop, our VNB is still roughly the same YOY. And for a VNB margin in Q1, it also increased YOY, now standing at 34.4%. And for our spread, our cost of liability still maintained at a low level, around 3%. And the ROI this quarter, due to increasing hedging cost, the ROI is slightly lower, 2.36. And for the persistency ratio, it remains roughly the same. And we have observed that starting from the end of last year, the lapse rate of policy has stabilized. Next slide, investment portfolio. We continue to focus on ALM. We focus on long-term investment performance. We continue to focus on foreign bonds with better yields, and for the respective returns, it is listed on this slide. And for foreign investments, the figures are pre-hedged figures. Page 20th, our investment performance. This is pre-hedging, benefiting from yield from new money. We increased 25 bips YOY. On the other hand, because the hedging cost, because of the widening of Taiwan-US spread, hedging costs have increased to 2.21%. And the hedging structure, we still remain stable, around 70% of hedging. And on the other side is the FX reserve balance. Now is at 9.53 billion. Now I would like to talk about our embedded value in 2022. As you can see on this slide, for economic assumption, we consider US rate hike, how it affects ROI, and for NTD policies, the short-term impact is hedging cost. So you can see the year one ROI, we decreased it. We decreased the assumption, and for USD policies, it benefited from US rate hike. We have adjusted the return upward. And for risk discount rate, it maintains the same as last year, 9.5%. And for non-economic assumptions, it is listed on the slide for your reference. And this year, we continue to commission EY, an independent agency, to review these assumptions. Next slide. The yield curve for NTD policies, it reflected the increasing hedging cost. We can see year one yield is at 2.98%, a decrease of 77 bits. And for USD policies, year one yield is 4.45, decrease 1 bips from rolling over assumption of last year. And the long-term yield has increased by 22 bips. The overall equivalent yield remains at 4.22%, the same as last year. Next slide. This is the comparison table of EV for adjusted net worth, mainly due to market volatility leading to investment asset valuation loss, which has decreased by 27.6%. And mainly due to VNB contribution, the cost of capital has increased by 8.8%. The overall embedded value is at 371.8 billion, a decline of 7.6%. If converted into China Life share, EV per share is at 75.6, and if converted into CDF shares, the EV per share is 22.2. Next slide. The detail of adjusted net worth. It is calculated by adding equity at the end of 2022, appraisal gain, FX reserve balance, and also market value of fixed income asset. The total amount is 129.1 billion. And for value of in-force, this factoring the release of interest and expected profits, data change, and overall the figure is 304.1 billion. Next slide, VNB movements. The main two factors is FYP decrease and also the optimization of product mix. This is a positive impact, and the overall VNB is 21.3 billion. Next slide, this is sensitivity analysis for your reference. Overall speaking, every 0.25% change in investment yield affects the value of in-force by 13%. Now I would like to move on to KGIV. As you can see on this slide, in the first quarter, it is mainly benefited from financial investment income. It grew 8% YOY. On the other hand, fee income in wealth management is listed here. As you can see, there includes bond FX. So YOY, it increased 32%. And for our spread and NIM, mainly due to rate hike and increasing funding cost, NIM decreased to 1.33%. However, benefited from FX business and loan structure adjustment, interest spread increased by 31 bips YOY. Through optimizing loan mix, we maintain a good asset quality. The Q1 NPL is at 0.18%. Next slide. This is loan and deposit mix. This is the YOY changes. KGIB continues to optimize its loan mix, focusing on growing SME and customer loan. For SME loans, it grew 26%, and customer loan grew 14%, which is mainly driven by 20% annual growth from personal credit loan. On the other side, for deposits, because of rate hike, the increase in USD rates has made time deposit more attractive to customers. And the deposit balance slightly decreased in Q1, but has returned to the level of Q4 last year by April. Next, CDIB. Please go to slide number 32. CDIB continued to focus on asset management. This quarter, Kunshan Taiwan Business Fund completed its first round of fundraising. The total AUM reached 51.1 billion. And in terms of principal investment, as you can see in the first quarter, China and global markets has continued to increase, mainly driven by investment drawdown and valuation growth. Next slide. As you can see, in terms of asset management, it has driven up fee income, which is growing steadily. And on the upper right corner shows the ROI of principal investment, which is better in response to market fluctuation when compared to Morgan Stanley World Index. And in terms of business expansion, starting from 2020, CDIB has started private credit business, which has been growing steadily year by year. And as you can see on this slide, the income distribution, relatively high interest income and fee income have brought continuous and stable business income to CDIB. Next, KGIS, page 35. The ROE is 13.9%, which is better than the industry average. And on the right-hand side, overseas operation is also KGIS focus. The first quarter, the contribution has reached 18%, which is a big increase compared to last year's 11%. And on the lower left side, for customer AUM, it has continued to grow, mainly coming from the growth of wealth management. On the other side, for the revenue in Q1, compared to last year, it has increased 17%. So wealth management is also the focus of KGIS. Next slide. The net revenue. First quarter net revenue, it is still benefited from the stabilization of capital market and proper strategy, which is at 3.4 billion. As you can see, in terms of the market share for various business, KGIS is still number 1 and number 2. And these are the summary of the 4 subs. Now I would like to open the floor for Q&A. Now let's welcome institutional investors and analysts to raise your question. So please use the function of raise your hand on WebEx so that we know you want to ask a question.
And first of all, Jamie Huang from JP Morgan, please. Jamie, you can speak. Can you hear me? Yes. Okay, thank you. I have a few questions. First, about KGIB. As I remember, previously you mentioned you expected the NIM this year to maintain at 1.39%. I'm not sure if in Q1 if we consider swapped after we consider swap impact, what is the Q1 NIM level, and the guidance for 2023, are there any changes? And second is about China Life. I have a few questions. First, about EV. Can you tell us more about in the VIF, what is the number in 2022? And in the slide, I've seen you adjusted down the expectation. In VNB, your return, you adjusted upwards the return. What is the difference? Is it due to hedging cost to VIF, or are there other reasons? Additionally, about RBC ratio, what is the reason driving the edge down quarter on quarter? Is it due to the C3 risk or your valuation on your equity positions? As I remember, you've already announced you're going to issue corporate bonds. What is the expected impact to RBC after you issuing the bonds? And do you see any pressure of the RBC go further down in Q1? Thank you. KGIB, we will invite the CFO from KGIB. Good afternoon. As for the name for KGIB, the 1.33 in the slide, we already reflected the swap impact. And this year, we expect the NIM to gradually recover. However, the funding cost, especially under the interest rate hike, the funding cost is growing faster than we expected. Therefore, the NIM recovery pace is slightly slower than we expected. So from the year end last year to now, our NIM is maintained at 1.33%. Since the funding cost is maintained at a high level, we believe this might be the end of the funding cost hike. In the future, we believe the NIM will recover. That's all from me. Okay, next, China Life. We will invite the chief actuaries from China Life to reply.
Hi, I will explain our return assumption for NTD because it reflected the increase of hedging costs and future fluctuation. Therefore, for NTD policies assumptions, we adjusted downwards. And for USD policies, because of the increase of foreign yield for USD policy return, we adjusted upward. And the equivalent yield is 4.22% this year. Last year, it is still the same figure, but rolling after 1 year is 4.3%. So compared to 4.22, it dropped around 8 bips. That's why, so VIV, the return dropped. And for BMB, because there is a rolling effect, in recent years, we continue to focus on USD policies. So for BMB, it takes up around 70%. So the impact is positive. And for RBC, Q1, it is mainly affected by C3. The impact is quite big, but after factoring valuation recently, the recent month, the figure is at 275, and after issuing bond of 10 billion, our RBC can further increase to 20%.
Okay. Peggy from Morgan Stanley. Peggy, you can speak now. Can you hear me? Yes. Okay, thank you. I have 3 questions. First, about what FYB target and the overall premium for this year. And the second question, the hedging cost Q1 increased more than the peer average. Your open positions have dropped. You didn't do proxy, so I would like to know in Q1 your peers increased their open positions. And what is the consideration that you have different strategy than the peers? And the third one is the China Life portfolio allocation. In Q1, you increased TAIEX investment. And the dividend income this year, what is your expectation? Is it going to be better than last year? And that's all from me. Thank you, Peggy. I will invite the Chief Actuary from China Life to answer the questions.
Good afternoon. The rate remains high, and there is still full of uncertainty for policy sales. We are still conservative. In the Q1, FYP dropped 30% YOY. However, industry average is 39%, so we outperform the industry. And in terms of product strategy, we continue to focus on high margin, high CSM product. In Q1, for protection type policies, our market share is nearly 12%, number 2 in the market, and for USD policies, the percentage is 60%, which is higher than industry average as well. The FYP expectation this year, which is the same as last year, but for product mix, our BMB will grow by 5 to 10%. Now for investment for hedging ratio, our hedging strategy is stable. So different peers might have different strategies. For us, we want to maintain a stable approach in terms of hedging. And for equities, for Taiwan stock holding, we also remain stable. We did not increase a lot, and the dividend will remain the same compared to last year. Thank you.
Jenny, I think you have further question because I saw that your hand is still raised. Sorry, none from my side. Are there any other institutional investor or analyst who would like to raise a question? Tianhua from Bloomberg, please. The floor is yours. In terms of our asset allocation, we don't see much changes other than the changes in Taiwanese stock. And do you have any guidance for your allocation in future? And next is the FX reserve under the new system. What is the amount of hedging cost? Okay, then we'll turn to Lauren for the question.
For our fund source for USD policies, we have more of that, and therefore we will use it for foreign bonds, and the benefit is there is no hedging cost, so it is beneficial for our income. And for other assets allocation, if we look at NTD assets, the hedging cost is quite high. Therefore, we will not turn it into foreign investment. We will focus on domestic investment, for example, bond ETF. So this is in terms of asset allocation. Second question regarding the new scheme of FX reserve, how beneficial it is for us. In the first quarter, the hedging cost is high. With the new scheme, with the help of it can drop around 25 bips and it will be around 1.5%. I have another question regarding the ETF we invested. What's the percentage and how much quota do we have left? Will we use up all the quota? Thank you. For NTD bond ETF, there is no quota. Even if there is, we still have a long way to it. So for bond ETF, the percentage we will maintain at a neutral level. This kind of product in the market, we know that for single ETF there is concentration risk to our total assets. It will maintain at around 5 to 6%, but it's not certain. It depends on the market condition.
Next, we'll invite Tina from Capital Investment. I would like to clarify with you that in the Q1 swap for KGIB, what is the income generated from swap? And since now the swap market is still very hot, do you have any clear guidance for what you will be doing or what will be the contribution from swap to the business? And if the spread, excluding the income from swap, is your spread going to be in decline or not? And this is my first question addressed to KGIB. And second question is also to the bank. I noticed that your loan in the first quarter has slowed. And what will be your momentum to drive this business? What will be your guidance for the year 2023? And my next question is to China Life. And in Q1, you have about 40 billion of unrealized loss due to valuation decrease. And what is the percentage of bond and shares in between? Okay, thank you for your question. For the question to the banks, we will have Chris to answer. Thank you for the question. I think the first quarter swap amount is at about 400 to 500 million. And the P&L from swap is actually a kind of fortune from us, especially when the spread in US dollar and Taiwanese dollar has widened and there are more and more US deposits in Taiwan. In our bank, as well as other peers, we believe that in the following quarters, we expect the swap market to cool down. And if we reflect back the NIM without calculating swap, indeed the spread has decreased. And without swap, our NIM is at about 1.2%. And next, on your question to our loan strategy, previously we focused more on the large corporation loan with higher spread, and our growth, we have seen double-digit growth in the previous years. And the reason why this year we have seen a slowdown is that large corporation listed companies, their spread has marginalized and resulting in the decrease in the loan amount. And we believe that we will see an increase of 5% in our position, but in terms of our different type of loans, we do have different targets, meaning that in P loan or in new loan, we want to see a growth of about 10%. And next we will hand over to the CFO of China Life to answer the question.
Hi, Tina. About 2/3 is fixed income and 1/3 is equity. Thank you.
And next, we'll invite Xinwen from Commercial Times. Okay, we can hear you now. I heard that for China Life this year you will be issuing the corporate bond. And are there any plan for CDF to also issue bond? That's my first question. And next is for international market and also domestic market. In terms of the operation of securities company or other companies, are there any plans for further merger and M&A from the CEO? Okay, we'll have Steve to answer the question.
So as I think you're aware, we recently obtained a renewal of the capacity to issue further debt if required. We've been consistent in our view that we will only raise it when it's appropriate and it makes sense in the markets. And as you heard a little bit earlier, we've managed to maintain very strong capital ratios, and our double leverage ratio has improved. So we'll continue to monitor that closely, but there's no immediate plans at this stage. In terms of M&A, we have been very active in terms of pursuing several opportunities, both domestic and overseas, but we're not in a stage that we can communicate anything about those.
Are there any more questions from the media? If there's no further question, I would like to thank you for your participation as well as the questions from the investor as well as the media. And this ends the investor call today. Later, you will be able to find the slide and the recording on our investor relation on the official website in CDF. If you have any further questions, you are welcome to call or email us. And lastly, thank you again. I wish you all good health and good luck. Thank you.